And good morning, everybody, and welcome to the pre-market rundown for TriggerCharts. And today is Friday, May 8th, 2020. My name is Andrew Horowitz, and we have a Jobs Friday here. Pretty interesting what's going on in the markets, considering the fact that we have one of the worst particular jobs numbers that we've seen in all of our lifetimes, definitely all of our lifetimes. Before we get any further, I want to mention that this is for educational purposes only. It's not a recommendation to buy or sell any security. Anything we talk about is just that, educational. Investing involves a great deal of risk. Make sure that you know what you're doing before you push that button, and don't take anything that we've discussed as a specific recommendation. All right, we got that? Okay. Before we get any further, I wanted to launch a quick poll here today. I thought it'd be interesting to find out what you thought of with regard to the opportunity for you to go and travel sometime in the future. I mean, where are you thinking? Are you going to be traveling by plane or maybe by cruise anytime in the next 1 to 2 months, 6 to 12 months, whatever? Anyway, there's a cool poll on there. I thought we'd just get our group here this morning to put together what their thoughts are, and I'll release those results in just, we have 28 seconds or so till it goes. So the poll should have popped up somewhere in your Zoom meeting on there. I want to mention also that where are we this morning? Well, we saw a pretty significant unemployment rate number, maybe better than a lot of people expected. There was expectation for 16, 17%. Came in at 14.7, still 20 million people out of work. So there's some statistics that are working there. Interestingly enough, futures on the Dow up 283 points, on the S&P up 33, on the NASDAQ up 88. So once again, we are saying the data doesn't matter. Or maybe even better yet, there is a disconnect between the economic numbers that we've seen recently, what we expect to see in the future, and what's happening to the market. I mean, we can go through all those numbers, and we'll talk about some of them in a moment, but there's definitely something else that's going on in the background. Maybe it's just the momentum trade. Maybe it's just the simple idea that, hey, things are going to get better sometime in the future. Whatever it may be, we are seeing that once again, even though there was a wide range of potential numbers to come out this morning and this week on the ADP numbers, the initial claims, 3.9 million or 3.7 million more this week on initial claims, as well as the ISM numbers. I mean, go down the list of everything that's going on. We are seeing reopening, so there is something there that maybe investors are hanging their hat on, saying, you know what, this is not going to last forever, and I might as well get my money to work right now before it runs away from me. And I think that's a lot that's going on. There's a lot of FOMO that is happening, a fear of missing out on this trade. It's interesting because Tom McClellan put out some numbers and talked about the money coming out of the markets. Over the last couple of weeks, a significant amount of money has actually come out of various ETFs in the S&P 500, in the Qs, etc. But meanwhile, we're seeing that the Qs are actually positive for the year to date right now, which is a pretty astounding situation. So when we look at the overall and realize there is this disconnect, what we have to do with that in mind is really pay close attention to the charts. And the reason why we do that is because without any other information that we can fundamentally hang our hats on, charts are the only way to understand where we are, where we may be, what the levels are, what the support is, what the resistance is, and that's what this is all about. On the right-hand side of the screen, you'll notice that we have and we've been continuing to have the same chart up, which is the S&P 500, looking at the Fibonacci numbers, looking at the trend, looking at where we are right now from an aspect of a daily chart with respect to the TriggerCharts Commander Series, which I'll mention here right now, that we are offering for any new subscriber to the Commander Series a 4-hour coaching session that's online. You do it at your leisure, and it's $199. Usually that's what we charge for it, but you can get that for free with a subscription to the Commander Series over on TradeStation. You go to the trading app store, over on TradeStation, you'll find that. But all these things that we're talking about here, you'll notice that there's some gray, right? These little gray nubs that are going on. We had a move to the upside, came in. We're playing the insides right now. Upside, the Fibonacci coincides with and confirms the 61.8% Fibonacci, confirms where we are also in terms of TriggerCharts upward level. The S&P is where we're trading here. The SPY is trading at, let's call it 291.5 or so. So we're talking about, right about on the upper side of the range right now in this range box that we have right here, which we call the altimeter. So what's happening right now is this bifurcation in the markets, and what we're finding is that there are winners and losers. We're seeing that the large cap and very heavy tech-oriented NASDAQ is performing really well because there is significantly a lot of money going into what people believe are going to be the consistent winners, those companies with good balance sheets, those companies with the opportunity to do well in this kind of environment, but also those happen to be the largest of the large caps. And when you look at the market capitalization of the S&P 500, not the Dow, we'll put that aside, but the S&P 500 and the NASDAQ, you have to realize that the way those indices work are the largest stocks in those indices have the greatest amount of overall implication on how those indices work. Now, with that in mind, the larger are getting larger, therefore having even more of an outsized overall potential impact on that market. So pretty interesting. It's kind of like a little bit of a snowball that's going down the hill. It gets bigger and bigger and bigger and becomes much more intense, and it becomes that much more powerful. So as we are growing these large caps, and I'm going to show you something in a moment, which is a chart of the large caps versus the small caps, and you're going to see what I'm saying. Before we do that, let's get to our poll here. What do we got? Question was, when will you travel by plane or cruise again? Now, 0%. Probably expected. 1 to 3 months, 23%. 3 to 6 months, 38%. 6 to 12 months, 31%. And not for a very long time, 8%. Me, I'm up in the air on this. I think that if we can in fact find a way to sterilize and to provide some kind of safety, I would probably travel. The question is where I'm going. That's another discussion entirely. A lot of places are problematic. Cruises, probably a long time. I don't see any reason to be cooped up in a giant metal can with other people that I have no idea, which, by the way, cruise ships traditionally have been problematic with the norovirus for years. So there's some issues right there that we got to deal with. Let's take a look at this chart that I put up here. This is the Russell 1000 large cap index based on the ETF, which is IWB, and the Russell small cap index based on the ETF, IWM. And this is a chart, by the way, that you can create inside a TradeStation. This is a TradeStation chart. And what it is a percent change chart. And I went back to the beginning of this year. And you can see that the small caps are down 23%, not on a total return basis, on a price basis, since the beginning of the year. But there is a big differential when you look at the large caps, right? The large caps are only down about 11.6%. That's a pretty big spread. And if you look at where we dropped and where we came to on the bottoms, you know, down on March 23rd or so, that bottom, small caps started picking up and getting a little bit tighter, right? We were both down about 30% there on about the 25th or 27th of March, but then that upwards trajectory of the large caps compared to the small caps just could not keep up by any means. So it's a very interesting situation that we see right now, that where we are is in a world that is really looking more so not at earnings, but looking at balance sheets, looking at the quality of the company, the stability of the company, the staying power of the company, in order to really judge what is going to be the places that investors want to place their money. And speaking about earnings, we've seen a lot of earnings this week. And when it comes to earnings this week, what I think is really interesting was that for the most part, what I saw was that companies that pulled their guidance and maybe had a beat last quarter have done pretty well. However, those companies, for example, a company today put out their earnings and adjusted their guidance, gave a little bit of hints of what was going on, even though they pulled it maybe a few weeks ago saying, hey, we're not going to provide guidance and here's an interim update. Like ROKU today, stock is down pretty significantly, last I saw at least, in the pre-markets due to the fact that they updated their guidance. I think what's happening right now is we're looking backwards, because that's when the quarterly reports that are coming out right now is somewhere ending about March 30th, March 28th, March 31st, depending on how the company did their books. And they look pretty good, especially because analysts reduced their analyst expectations on many of these. Therefore, companies are able to beat. And especially if you beat on revenue, that's what's being looked at. And then finally, if in fact they're pulling their guidance, so basically we just, not be able to see anything, flying blind into the next quarter, they're like, you know what, at least we don't have to deal with what the bad news is. We're not seeing it. If we don't see it, it's not happening. Because maybe the end of May, latter part of May, and maybe into June will be much better as things start reopening, and therefore they will make up a lot of the losses they saw in April, which was pretty much on a lot of these companies, like we saw Bookings.Holdings, a TripAdvisor last night, 90% reduction in overall revenue, cutting about 23% of the workforce on TripAdvisor, and we're seeing this company after company that's in a lot of these spaces. Want to mention a couple other things here. I'm just going to put this on. Somebody asked me about this. So this is the link to get to the trading app store for the Commander series. Treasury rates, there's some discussion starting to percolate up about them going negative. I don't know if that's going to happen. Be pretty interesting to see if that does happen. But this Treasury rates are getting pretty low. We saw one of the lowest rates we've ever seen in history on the 2-year yesterday, 0.12% on the 2-year. And I think that stocks are following that because when you do a valuation based on a risk-free rate of return and you're looking at these close to zero, what's the valuation and the multiple you put on stocks? Well, it could be a lot higher than otherwise. Let's see. I mentioned that the S&P 500 is in the 61.8% retracement for Fibonacci's. Here's a little secret. I want you to pay attention. Do I really care about Fibonacci's? Absolutely not. Something interesting to look at because I know other people do. Same thing with moving averages. Do I care about a 50-day moving average? Not really. Do I think it's anything really scientifically and maybe important from a trading standpoint? Not really. Same thing with 100, 150, and 200. But what I do know is there's a lot of people that think that it is important. And as such, if they think it's important and those players are maybe the institutions, if they're saying, hey, the first time we get back to a 50-day moving average, I'm going to buy. You know what? I got to respect that. I'm not going to use that maybe in my analysis for where I think things are going to go because it's going to be a lot different when I look at volume-based pricing, price at volume at price, and I look at where we are overall on a stock, and I kind of put my grids and my colors and my things on there, but I still need to pay attention to what my neighbors are doing, right? You know, if everything is going fine in my house and all that, but the neighbor house is burning down, I got to be careful, if nothing else, that it doesn't come over on my side, right? I got to make sure that fungus on his grass isn't going to come over to my side, or I need to at least pay attention to what they're doing. And as such, I'm paying attention to what's going on overall on that side of the equation to make sure that, you know what, there's a little bit that I need to look at and something to pay attention to. So while I don't really, and I look at it just for the aspect of understanding where it is, the most important thing is to understand what everybody's doing out there, what they're focusing on, putting that into maybe a small quadrant of what you're looking at as well to make sure that you're on par with what they're doing, because they can have a big effect if they are substantially large. All right, let's see here. What else we got? 44 states, about 44 states are reopening. Most of them don't seem to meet the criteria for reopening at this point, but okay, I guess people need to get those tattoos recolored. Economic, the ISM services, the manufacturing, clearly, unquestionably, here we are, absolutely, we are in a recession. I don't think there's any question about that. I think the big issue that we really need to understand is how long it's going to last. The big issue is not, are we having a recession, but the issue is the length of this recession, the time period that we're going to have until we can get back to normal. The reason for that is that if we have this momentary sudden stop and things go awry and we have these problems, and it could be, well, I would say 2 months. I'm not saying it's going to be, but I'm saying 2 months and then everything goes back to normal. Not a big deal because we got a lot of stimulus, trillions of dollars of stimulus that came in. And that's what I think markets are really looking at right now. Markets are really focusing on the fact this will be short-lived. It's a phenomena, and that's it. We're reopening. We're not going to have a new rise of cases. We're not going to have any problems. And moving forward, what this is going to be is just something in the past in the rearview mirror. I don't necessarily subscribe to that. I don't know if you do. I just think that it's going to be a lot longer than that. Unemployment rate, we mentioned 14.7%, 21 million people lost their jobs overall in the last month. I think what's going to end up happening is there's going to be further adjustments because they couldn't count the numbers properly. I think that next month we're going to see actually a higher number of unemployment and moving on to that 17, 18%, almost at the historical point of where we saw it back in the Great Recession, depression, not recession, depression, because we're over what we saw in the Great Recession back in 2008, 2009. What we're going to see is close to, but not getting to the 24%. The difference is that lasted for a very long period of time, and it took a long time to get to that point. This was sudden. We may see a reversal off of that sometime. But if we go by the answers to your questions that you just gave me in terms of the poll, a lot of people are going to be holding off going to restaurants. Restaurants, even though they're going to have people back, or Disney opening up in Shanghai, even though they sold out in a matter of hours, the fact is there was a lot less tickets for sale because they're going to constrain the amount of people that are allowed in the park at any given time. Crude oil clawing back, still a big question as to if we're going to see the June contract in a matter of weeks start rolling lower and then potentially roll back to the negative territory if in fact we have still this oversupply situation and the holders of those saying, you know what, I don't want to hold this. I don't want to get delivery, just like they did last time. I don't think it will be as deep and severe because that was a once in a lifetime thing, that negative 40 print at the low for per barrel of crude, but the potential to get down pretty low is very high. So the June contract is the one that's at risk. Economics numbers next week, we're going to see CPI, PPI, initial claims. We're going to see industrial production, University of Michigan, May numbers, the first time we're going to see that. And some stocks to watch today. We're going to look at a variety of names, VEEV Systems, SCI, LK. There was a lesson, by the way, yesterday, and it was posted today. I was on an interview with, maybe it was Wednesday I did it. Maybe it was Wednesday. I did an interview with Investors Business Daily, their podcast. If you look up Investors Business Daily or IBD podcast, it's a video podcast. Myself and the host, Arusha, went over about an hour's worth of information, 3 different quadrants of information, segments, if you will. Talked about some stock ideas, talked about some lessons in terms of when to sell, and talked about the overall environment. Everybody that I've talked to, even the particular podcast that we're doing this week, there was someone that was on, we recorded last night late, we'll have it up this weekend, from YCharts, and he talked about how he and his team also are very confused as to why the fundamentals and the economics aren't matching in this disconnect that's happening. So let's talk about some of these, and I think Uber is a great example of a company that guided down but said, hey, we're seeing things get a little bit better, which of course, from a negative 90%, maybe we're at a negative 80% right now. That's better, but oh well. Before we do that, I want to go here, talk a little bit about the big picture. McClellan, the McClellan oscillator shows us we're at a plus. We saw that big ramp up and up to the 300 levels. Let's kind of do that. Up to about 300 levels, which is the second time that we've seen that peak and then start rolling down. Spearman's a little concerning. We're starting to get a roll down in the Spearman. This rally may be a little bit long in the tooth. The key reversal indicator is a mess. I got to tell you, we've never seen this kind of movement on the key reversal indicator, saying that markets currently are in equilibrium, meaning that it can go either way. Let me pull up something here. So I think that what the big issue here is that we are seeing that markets are not necessarily overbought or oversold. They're just kind of like doing their thing. Remember something. Over the last number of days, we've seen markets rally up in the morning only to kind of come in towards the end of the day. I'm not sure what that pattern exactly means, but that is something that's very interesting to look at. I think there's a lot of day trading going on, a lot of speculation that's happening, which is par for the course. But I think there is some resistance saying, you know what, I'm in this for the short term. I'm in this for a couple of days. I'm done. I'm not holding this for a while. Markets is getting off the hook here. You know, with this recovery that we've seen right now, again, upwards of 50 or 60% of the downslope was recovered at this point. So maybe there is some opportunity for a down. How far down? I mean, you look at the S&P, just very simply, And we can probably bring that up on our other charts. Let's bring that up over here. Let's bring up the SPY. Why don't we? We'll make it a little bit. That's not it. Bad typing. There we go. S&P 500. Now, what I'm going to do is I want to bring on my radar here because I want to see how this all looks. I mean, there is really good support here at about 279. And I can see that because when I look at this, and I'm going to make this a lot bigger for us. I mean, well, let me just say one thing. I like to look up top here. Let's kind of bring this up here. SPY. Did I do that right? It's coming up. The SPY is interesting. Not sure we're not getting an alert here on that. Something could be with the data that's coming through. So let's look at something else. Let's look at the INX. Wait for that. That's the S&P 500 itself, not the. There we go. So we got a long on 3 weeks. We have nothing on the daily. We have look up top here, the 40, 60, 30. I look from right to left always. I'm not seeing anything really here. That does coincide to what we're seeing on a daily. There's nothing here. So we are long on a 3 week. That is the overriding trend. That's what I always look at first. When I look at this now and I look at the INX, or let's bring up the SPY here, it's the same general look. I see that, you know, this B pattern that we looked at before. Let me bring up a quick annotation tool here. And I will draw this really weird B pattern. Talked about this a lot last week. This B pattern right now shows us that there are two levels of support bulges, and in between there's a bit of a hole, right? Does that make sense? B. So when we look at that, and I'll clear this for us, this B pattern that we have right here, that also coincides with this range right here. I'm going to just draw a quick mess right here where there's nothing. So down to 260 seems a little bit reasonable from a technical standpoint. Fundamentally, frankly, I think what 2200 is really where we're at, but nonetheless, we see the aileron is moving up, so positive momentum. That is a really good sign on a daily basis, but we do have this hole here. Watch out below 272. 200, and I'll call it 280. We can kind of just put our cursor there. 278 is the level below, and we have a high volume node on our radar as well. So I like to kind of look at that back and forth to see where the bulk of our overall resistance or support is, where the volume is. That's a real good granular look at where volume and at price in that range of the radar. So I kind of toggle that on and off on a regular basis. So we have really good support, like I said. If we want to just simply even draw a secondary line here, I mean, look at this support going way back. What is that? 281, 280 or so. That is really good support. So right now we're trading at 291. What is that? 10 points, 4% downside. I see that as reasonable. Probably going to try to hold. If we go below, I see the next level very clearly 272, and then down to 261. Below that, there's nothing. There's nothing. Free fall. So just something to consider and to look at. All right, let's look at a couple other things. I want to mention Uber to you because Uber was trading up in the pre-markets, up 5.98%. So Uber is blasting through this upper zone here at about 32 and change. So where are we now? 32.78 is where it's trading the pre-market. Right on the line that we could see from drawing left, kind of this decent level. You know, I would have ranged it right about there. So it's trading right about there. 32 and change is where that resistance level is. If it does, in fact, hold that resistance level. One of the things they said was things are really bad. However, we're seeing things that are a little bit better now. And we saw this as a reaction yesterday with Lyft, which is also up in the market. I mean, moved from $25 up to $29. I mean, pretty amazing. So again, the charting is really important to look at. I look at both the radar screen. That is what is so dramatic. And I challenge you, by the way, it's really easy to get a TradeStation account and to have it for free. If you don't know how to do it, send a request into support@TriggerCharts.com. I think all you need to do is put $5,000 in an account, and the entire platform is free. So easily get our indicators, and there's a 10-day free trial for all of these. But the robustness of having the top line where we have the radar screen, which gives you multiple time frames on one line, no one has done that but us. Nobody. Even TradeStation said it was impossible to do. We did it. And to have each of these charts that are able to be moved around and changed is really dramatic, especially because these are institutional-based tools. We're looking at where the line in the sand is. All important. Go look at all of the reviews on TradeStation, and you'll see what people are talking about and why they're using this. I get emails every single day from people telling me, hey, thank you. I got some great trades today on this, and it was perfect on the line. Where are we here now? Again, you have this area above about 36. That's your line that you really need to look at. I would just simply say that, if you can get and sneak above the level that we have now and then up to about 36 and change, I think it's going to be pretty good for Lyft. Same thing for Uber. Go back there. If you can get above this line, I would really sneak this up a little bit higher, 32.23 or so. Give yourself a 10 cent or 15 cent upside. That could be a breakout up to probably next level, which is about 33, 34. Nothing dramatic, but good. Bitcoin, you could do things like Bitcoin. It didn't seem to like what I just did. I'm not sure what I just did that didn't like. Oh, I see. All right, it liked it. It's fine. Bitcoin, you could track this. You could do this on a daily. You could do this on a 30-minute. Take a look at where this is. If you're trading Bitcoin, Bitcoin can be traded in a variety of accounts, inclusive of TradeStation. You can trade the futures as well. You can take any time frame you want. What do we have here? We got 15-minute. You can take a 5-minute. I mean, these all work perfectly, and you can find areas. Now, I'm not a trader of Bitcoin, but I just want to let you know that it's very versatile. The charts work with any price and volume-based or any price-based tool. Wait, I had some other ones I want to mention for it. VEEV Systems. VEEV Systems down a little bit the last couple of days. I want to go back to the daily, but look at this chart. I mean, that's a beautiful chart. A couple of times got you in at the 161 level on the all-time high at that point. Got you out about 180. Been sloppy trading since. Back to a long right now. Seeing a little bit of a divergence on the downside. This is a company, we talked about this a lot on the Interact and the of the IB, the Investors Business Daily podcast yesterday. This is a company that is kind of like the Salesforce for biotech companies. Keeps all of your things straight, right? It keeps all of your communications, your testing, compliance. It's a software company that really is used and embraced by the biotech and healthcare industries, which are pretty hot right now. SCI, interesting stock. You got to get really above this 39 level, which is struggling to do. This is a funeral company. Something I want to throw out to you as a thematic idea. They build caskets. They own funeral homes, funeral parlors, cremation services, sell a lot of the things that are involved in that. Something to look at. I want to mention we also talked about this yesterday, and the reason why I want to talk about this is this. Talk about sell rules. Sell rules. Don't get greedy. Make profits. Very simple. What's interesting about this, what do you notice? It hasn't traded since 4.6. This is Luck and Coffee, something that we've traded many times to the upside, just beautiful moves. And then when it started rolling back over, kind of out of it, didn't get involved in it, said goodbye to it. Luck and Coffee, there's some fraud going on. Chinese fraud equals halts. Halts in China equal days, weeks, and months. There's not a halt here that's a 20-minute halt. This is halted, so you got to be very careful about that. Wayfair hit an all-time, well, excuse me, not all, yeah, hit an all-time high, right? Yeah, all-time high. There it is. Hit an all-time high. It's seen as the company that was delivering furniture for those that were home and had to utilize work from home. And Wayfair seemingly did very well there on that. So interesting situation there. Down 133. Big nothing right now to really go against here. ROKU, I mentioned, was down on the day, down what, 8.5%. ROKU has this range that it likes to play at, 125. 115 to about 137 recently. And I kind of marked this level here about this 130 some time ago. That was really interesting. Right now it's trading at what? 125 and change. Let's bring that down. 120. Let's go right there. So look at that. Looky. Right on our high volume node. That's the light blue cyan color. That's an important thing to look at. When we look at where we are, those are usually support points, and you can trade in between that sometimes. We don't really look at that as something that's a high probability trading in between. We like to look at the outside, the breakouts, the breakdowns, the high and fast moving levels that are outside of the ranges. You could trade on the inside. You could short on the up, go long on the bottom, go short on the up, and that's what's kind of playing out with ROKU. I would like to see a breakout. The problem you have with ROKU is under 113. The potential to move down to about 80 is very high. Trade Desk also down today, but a beautiful chart nonetheless. Hit an all-time high yesterday, and then is now trading at about 298. Where's it trading? 298. Yeah, 298. right about there. Once again, right on our line. So look at that. It's right there, 298.01. There's our line right there, 298. So you had that point. Now, below that, you got a problem. I mean, if you look at this and look at this carefully, you know, you have nothing really below this area up down to, you know, what are we talking about? 279. So you have another 20 points to the downside on this if it does not hold up. I'll tell you right now. And if the momentum goes that way, you got some problems. Anyway, I want to thank everybody for joining me. There's a lot of questions that came in. TradeStation, you don't have to pay for the data either. Contact them, find out and ask them. Tell them I sent you when you call. Tell them that you're looking for the package that is free information. Find out what the costs are and all that. And, you know, go to look at that. Greg, next time talk about actionable stocks. Yeah, I know we try to give you some educational things. I talk about 8 different stocks on here that has some interesting plays and where to go on this. So maybe we'll come up with some things that next time we'll have a little bit more from the daily. But again, a little education goes a long way to understand where we are and what you should be doing, because I want you to find the actionable stocks and I want you to be profitable. I'm not going to be there all day for you, sitting there and giving you advice, and I want you to be able to do it on your own. But that's a good point, Greg. Thanks for bringing it up. I will see you again next week. And again, thank you so much for joining me.